Hello, everyone. Larry Bashara, president of John Adams Mortgage and Total Home Lending. I'm here today with Brian Karaszewski from MGIC, also known as Mortgage Guarantee Insurance Company. And Brian, we wanted to talk today about mortgage insurance and try and clear up any misnomers about what mortgage insurance does. So first, if you could let us know what mortgage insurance does, not only for the lender, but for the borrower as well.
Sure. I guess I'll jump in on and good morning. And yeah, I'll jump in on the borrower side and really what does the borrower get out of it? And I think that's the mentality we really got to shift here is where's the benefit to the borrower, because the borrower only sees a benefit to the lender. And what private mortgage insurance really does is allows for the borrower to get into a home sooner instead of waiting for, that 20% down to be saved up. So we'll allow homeowners to get into a house with as little as 3% down and sometimes 0% down. We'll do up to 100% financing. So sometimes that is not realized by the borrower or really the lender for that matter. On the lending side, what's the direct benefit? Well, this is to insure the lender and the GSEs in the event of loss or default on a loan. So if the borrower cannot satisfy the payments of their home or they fall into a default situation, we're here to backstop that transaction, make sure that the lender is not taking a complete loss on the transaction.
So from a mortgage company side, what we try and do when a borrower meets with the loan officer is do the math. Does it make sense to do a full 20% down or maybe 10% down or 5% down? Yes, you'll have an increase in payment, but where's the benefit lies in hanging on to some of that money versus waiting to save that money up. So it's important that you're working with a loan officer that helps consult that a little bit. Brian, you sent out some statistics which were pretty amazing on a typical median income household to save up money. How many years?
Yeah. So if you're on the typical household, and this is in the state of Michigan, USMI, which is a big coalition that tracks the private mortgage insurance industry, they put together some statistics, and it's going to take 23 years for someone to save up 20% down on a median household single family home in the state of Michigan. On the flip side, if they put as little as 5% down on a transaction, it's only going to take 8 years. And we kind of alluded to that you can do as small as 3% down or sometimes 0% down. That's obviously going to further accelerate the ability of the borrower to make that purchase and have enough to put down for that transaction to take place. So pretty incredible statistics. I believe also 37,000, close to 37,000 people in the state of Michigan in 2022 used private mortgage insurance on their transaction. So people are taking advantage of it. Pricing is very, very competitive. I think that's also something that's a misconception in the industry. MI is very cheap right now. It's incredible. If people just take a little time to look at it and use it as part of their strategy, whether it's on the lending side or the borrower side, I think they'd find that it can be used as an advantage in some cases, winning a transaction.
Wonderful. Great information, Brian. Thanks for joining.
Sure.
Enjoyed having you as a guest, and we'll have to do it again soon.
Yeah.
If anybody has any questions about getting pre-approved and finding out what the best mortgage is for them with or without mortgage insurance, please contact us at mortgages@johnadamsmortgage.com. We'd love to help. Thank you.